Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Vijaya Diagnostic Center Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Krishna Kiran, Head of Investor Relations. Thank you, and over to you, sir.
Thank you. Good afternoon and a warm welcome to all of you. I am Krishna Kiran and I handle Investor Relations for Vijaya Diagnostic Center. We hope you have gone through our Q3 FY22 financials and our press release. I have with me Ms. Suprita Reddy, CEO, Mr. Narasimha Raju, CFO, and Mr. Siva, Head of Strategy. We will begin the call with commentary from the management team, followed by an interactive Q&A session. This call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on date of this call. These statements are not guaranteed for the future performance and involve risks and uncertainties that are difficult to predict. Now, Ms. Suprita Reddy, our CEO, will walk us through the key highlights for the period. Over to you, ma'am.
Thank you, Krishna. Good afternoon, everyone. Thanks for joining the call. I hope all of you and your families are safe and doing well. I will present the highlights for the third quarter and the 9 months of the current financial year and our action plan for growth going forward. All through, my team and I have strived to maintain a steady and progressive financial performance, and our results for this period demonstrated. For the 9 months, our revenues increased by 31% to rupees 346 crores, driven by strong growth in our non-COVID business. With a growth of 40%, our reported EBITDA now stands at 156 crores with a margin of 45% of revenue. The profit after tax posted a growth of 62% to 86 crores. I would also like to mention here that our profit for the first 9 months is higher than the profit for the last financial year. In Q3 of FY22, our revenue grew by 11% to rupees 111 crores, and our net profit after tax grew by 2% to 25 crores. This quarter, we've added 4 new centers that are fully equipped with the state-of-the-art equipment, technology, and professional expertise. These new centers comprise 2 hubs, 2 spokes, and 1 reference lab. Our total center count is 89, comprising 24 hubs and 65 spokes as on 31st December 2021. We have also partnered with reputed corporate organizations for providing comprehensive health and wellness services for employees and their families. One such major tie-up was with the Union Bank of India, Telangana State, for 18,000 members in total, comprising employees, ex-employees, and their families for annual health checkups. We also bought out our Kolkata Hub Centers building for rupees 11 crores this quarter. This building was leased out to us for more than 2 decades. Our main focus is towards digitizing our business processes to optimize operational efficiency and enable the best possible customer experience. Our moves towards this end have been upgrading our WhatsApp delivery system to an AI-enabled comprehensive chatbot that brings in advanced features such as locating the nearest center, online booking for tests, access to report on WhatsApp, replies to customer queries. Developing a mobile application and a progressive web application which will enable customers to book any test at the click of a button. Other important services such as home collection, access to reports, replies to queries, reminders, analysis of health parameters, and many more can easily be accessed during this application. Working towards becoming a lean, asset-light organization by employing cloud technology. I firmly believe that these initiatives and our systematic plan for expansion will put us in good stead for the time to come and ensure better customer experience and also help us in improving operational and the financial metrics. Since we are expanding and opening many more hubs going forward, we've taken on board also Dr. Mukesh Agarwal as a director for the lab services, who comes with around 20+ years of diagnostic industry experience and is also a technical auditor for both the ISO and the CAP. Mr. Narasimha, our CFO, will now take us through a detailed presentation on the company's financial performance for the period.
Thank you, madam. A warm welcome to everyone on the call. I will now summarize our performance for these 9 months ended December 2021. The number of footfalls have increased by 53% year-on-year from 1.75 million to 2.67 million. Number of tests also up by 46% year-on-year from 4.71 million to 6.87 million. The strong growth in footfalls and tests is also partly due to low base in the first quarter of last financial year. Revenue per test was 504 rupees and revenue per footfall was rupees 1299. Consolidated revenue increased by 31% year-on-year from 265 crore to 346 crore. The growth was driven by 39% year-on-year growth in non-COVID business. Non-COVID business increased from 212 crore to 295 crore. COVID and COVID-allied business declined by 2% from 53 crore to 51 crore. The contribution from COVID and COVID-allied tests has come down from 19.9% of revenue to 14.9% of revenue. Happy to share that our B2C share stood at 94%. EBITDA grew by 40% to 156 crore from 112 crore in the corresponding previous period. EBITDA margin stood at 45%, recording an increase of 290 basis points over the corresponding previous period. The profit after tax increased by 62% year-on-year to 86 crore. Return on equity for the current period was 26% and pre-cash ROC was 42%. Now I will discuss the quarterly performance, that is the current Q3 quarter versus the previous Q3 quarter. Number of footfalls for the quarter under review increased by 25% year-on-year from 0.68 million to 0.85 million. Number of tests also up by 22% year-on-year from 1.91 million to 2.32 million. Revenue per test was 477 rupees and revenue per footfall was 1303 rupees. Consolidated revenue stood at 111 crore, an increase of 11% over corresponding previous period. We'd like to inform that our non-COVID revenue increased by 20% year-on-year from 85 crore to 102 crore. COVID declined by 40% from 14 crore in Q3 FY21 to 8 crore in the current quarter. The contribution from COVID and COVID-allied tests has also come down from 14% of revenue in the last Q3 to 8% of revenue in the current Q3. Our B2C share in current quarter stood at 95%. EBITDA increased by 3% to 48 crore and EBITDA margin is healthy at 43.2%. The profit after tax increased by 2% to 25 crore, resulting at a tax margin of 22.8%. Cash and cash equivalents at the end of this quarter was 235 crore as against 229 crore at the end of September 2021. During this quarter, fixed asset additions of 30 crore happened, including a capex of 11 crore for purchase of building of our diagnostic center at Kolkata, which was on lease for more than 2 decades. The remaining amount was spent mainly for commissioning 4 centers comprising 2 hubs, 2 spokes and 1 reference lab. Now I will hand it over to our CEO who will speak about the strategy we plan to adopt.
Let me also talk about the company's strategic plan for the near future. We will continue to focus on maintaining and growing our presence in our core geographies across Telangana and Andhra Pradesh. To this end, we have expanded 9 centers in the 9 months of the current fiscal. We plan to set up 6 more in the last quarter and have earmarked suitable locations in the core geographies as part of our expansion plan for the next 2 years. Our immediate next focus will be to expand to East India and the adjacent geographies where we have already identified multiple locations for expansion. The company enjoys a significantly strong brand recall, and the fact that majority of our business is through walk-in customers is a testament to this. Our motto to provide comprehensive diagnostic services of the highest quality under one roof at reliable, affordable and a customer-centric manner will continue to motivate and propel our business decisions. I now request the moderator to open the forum for questions from the audience, please. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Anyone who would like to press star and one at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashita Jain from Edelweiss Securities. Please go ahead. Yes. Hi. Thank you for taking my question. So my first question on rest of AP and Telangana region. So as you're expanding in the rest of AP and Telangana, what has been your experience so far compared to the Hyderabad region? Maybe in terms of initial uptick in the volumes or realizations, or maybe in terms of competition. Any qualitative color you would like to highlight?
Sure, Ashita. So, Ashita, if you look at our total count, we've already been present in the Tier 2 and Tier 3 locations of Andhra and Telangana. And some of these hub centers in these locations actually get a larger footfall than what we would see in a hub center in Hyderabad itself. Because we've always believed in following the same integrated all under one roof model. And once that hub stabilizes, we start adding the asset-like spokes in those centers. So even going forward, we don't see anything that's going to change in terms of the plan of the business itself. And we've identified these locations, and like I've already mentioned, there'll be 6 more opening before this year ends. And going forward also, there'll be a mix of centers coming up both in Andhra and Telangana in a mix of both hub and spoke. And maybe Shiva can just give you a number to complete the answer. What's the number, Shiva?
Yeah. So out of the 9 centers that we have opened in last 9 months, so 4 centers were in Hyderabad, out of which 2 were hubs and 2 were spokes. And the rest of 4 were in other parts of Telangana and Andhra Pradesh. Out of these 4, 1 was hub in Manchiria and the rest was spoke in our existing cities.
And Ashita, the other part of your question was the revenue per footfall is not very different, because if you look at even the number of footfalls itself is way higher in these Tier 2 regions compared to the centers that come up in the city of Hyderabad. So the volumes are higher and the revenue per footfall is a little lower than Hyderabad. How much would that be, Raju?
Anything between
5 to 10%.
5 to 10% is the lower, but the volumes take over that, Ashita, so that's taken care of then.
Also, Ashita, just to add one more point, okay, even at the cost level, we have seen the costs are comparatively the operational overheads, okay, the center overheads like your staff costs, housekeeping, security, etc., comparatively lower in these markets compared to Hyderabad.
Yeah, that's really helpful. My second question was on the eastern market. So how do you see this market contributing to your overall revenues in, say, year 5 from now? And could you please talk a bit on your strategy of expanding in this region, maybe in terms of number of centers or hubs you're planning to open, any acquisition plans, or any other quantitative or qualitative color you would like to give?
Ashita, so here, since we were focusing on our core geographies of Andhra and Telangana, East was a region we chose very carefully to make it another home market by the time we have expanded enough in this region of Andhra and Telangana. So that's about 2 years from now. But in spite of that, we've already identified locations to start a hub center in Kolkata maybe in the next 12 to 15 months. And then take it from there. So if you ask me year 5 from now, I wouldn't have an exact number probably, but that's a market where we will be starting first and not maybe expanding the number of spokes at the same pace that we would do in Andhra and Telangana, but definitely you will see a hub come up in the next 12 to 15 months, a year for that to stabilize, which is year 3, and then the spokes start getting added up in and around the region of Kolkata. And I won't have a number on that.
Currently, Ashita, the Kolkata region is contributing approximately 2.5% of the revenue. So since we have the plan to start the first hub in Kolkata, okay, in the next 12 month period, okay, the moment it stabilizes, we'll start adding the spokes. So definitely the 2.5% number down the line 5 years, okay, might be touching the single digit number also.
Great. That's really helpful. Thank you. That was from my side. Thank you. Thank you. The next question is from the line of Mitesh Shah from ICICI Securities. Please go ahead.
Thanks for taking my question. I have one question on the non-COVID revenue. Generally, Q3 is a weakest quarter for all the diagnostic players, but if I can see sequentially, the growth is almost it's 0.3, but it grew actually. So what is the reason for a weak seasonality quarter, and we have done reasonably well in Q3?
Yeah. Hi. Generally, in the diagnostic industry, what we have seen in our experience here is that the Q3 is a lean quarter, okay, compared to the other quarters.
Right.
So, but even in spite of that, if you see, look at our non-COVID revenues sequentially from Q2 to Q3, they are more or less flat. Okay, there is no dip in the non-COVID revenues sequentially. However, even though the Q3 is generally a lean quarter. And if you look at the year-on-year performance from the last year Q3 to current Q3, non-COVID has increased by almost like a 20% on the non-COVID revenue levels.
Yeah, I agree with you. Any particular reason that in a weak seasonality quarter we have done reasonably well, actually? Or is there any one-off, or it's just a normal revenue we have?
There are no one-offs. Okay, it's a regular revenue.
Got it. Thanks a lot.
Yeah.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Praveen Sahai from Edelweiss Financial. Please go ahead.
Yeah, thank you for taking my question. So my question is on the realization. If I look at on the YY basis, it's down, and on the sequential basis also, it's a flat to around 477 rupees level. So is this the sustainable level we can look at? And secondly, the YY correction is largely because of COVID prices has reduced, or COVID volume has gone down, or is there an element of some price correction in the non-COVID business as well, as you are moving to tier 2 and 3 cities?
Yeah. The price realization, if you look at it on a non-COVID revenue base, because it's proper to look at it on non-COVID revenue, because the COVID realizations were higher in the last year Q3. Okay, somewhere around the per test RTPs are somewhere around like 2,200 till mid-November, and gradually decreased to 850 and then further to 500 rupees at the end of the last year Q3. So if you exclude the COVID allied testing, if you look at the realization per test, okay, for the current quarter is approximately 472 to 75 rupees, which is similar in the last year Q3 also 475. Okay, so there is no impact on this front at the non-COVID revenue level.
Okay, that's really helpful. Second, on the volume side, how much is the contribution non-Hyderabad right now in the volume?
Can you just repeat that for us, please?
Yeah, in terms of the volume, in number of a test, how much is the contribution from non-Hyderabad?
Generally, if you look at our revenue also, approximately like 83% revenue comes from the Hyderabad, okay, and the 17% from out of Hyderabad. So we expect on the volume side also, okay, a slightly 1-2% change might be there, or more or less 17 to 18% might be the volume side contribution from out of Hyderabad.
Okay. Thank you, sir. Thank you for taking my question. All the best.
Thank you. The next question is from the line of Cindula Carvalho from Centrum Broking. Please go ahead.
Yeah. Hi. Thanks for taking my question. So, ma'am, just want to understand, if we look at our expansion plan in terms of our market share in the region, the dominance region that we are present in, what is stopping us from gaining a much higher market share faster? Is there anything that you see as a deterrent right now, or any challenges, or you think it's all open for us and we can capture it as fast as we can? Then what we need to do to increase the pace?
Yes, Cinderella. So definitely, if you look at the market share of Andhra and Telangana, I think today we have about 7% market share. And if you look at Hyderabad alone, I won't have a number from anybody, but it could definitely be a double-digit number. And per se, if you see, all of our centers, including the smallest centers that we open, are an integrated model. So they service everything from a blood test to an entire health package. So the number of centers, even if you see in Hyderabad, would be more than 60, but at the same time would be equivalent to say about a few hundred sample collection kind of models contributing to them. And we've not seen any major challenges in terms of opening centers, whether it is in the city of Hyderabad or the tier 2 and tier 3 locations. Normally for us, there are 3 deterrents that we see that we make sure. One is the location has to be absolutely spot on. The second would be the talent. And third is something that we look at, especially in tier 2 and tier 3 regions, is availability of maybe a government medical college to make sure talent is there in terms of the consultants themselves. Otherwise, there's absolutely not been any kind of struggle in opening these centers. Historically, we were very comfortable opening about 11 to 12 centers a year. If you've seen, very comfortably, we are opening about 14 to 15 centers a year. And even going forward, we're very confident of maintaining that same rate. In fact, the mix is what matters here. So we say about 11 spokes is what we open versus 3 to 4 hub centers. So depending on these factors that I've mentioned, the mix changes and we open these centers. In fact, we have clear visibility of the next 2 years of what we would be opening. We're very confident on that.
So just to add on to that, so if we have a clear visibility, how should we see in terms of our market share? Do you expect it to be overcoming 2 or 3 years, whatever is the horizon you are looking at? What is your internal aim?
Yeah, so we cannot tell you the exact market share, but year on year we will be inching a little bit. So if you see it in the current year, so the market is expected to grow at 12 to 13%, but currently if you see our 9 months results, so it's almost more than 25%. So at least in the current year, we would definitely in some percentage. Like that, maybe 3-4 years down the line, we will enter into double digits in Andhra and Telangana. Because today we are more in Hyderabad. Now we are concentrating on other parts of Andhra, Telangana, where we have 80% of the population in the states.
Okay, and in terms of any competition that you see in these regions, specifically in AP Telangana?
So the competition has always been there. In fact, different competitors at different times, and we've not seen any kind of impact on our business from there. And even in the interiors of Andhra and Telangana, we're a very differentiated model. See, when we go in with a large hub versus you have a lot of unorganized players there. So when you're giving them something at an affordable price in a better facility with better technology, and this is, I think, what has created that word of mouth for Vijaya, the high brand recall and the trust. So that's been going well. And we've seen, in fact, a lot of competition mushrooming in COVID times. And at the same time, not seen an impact on that on our business in these regions.
And anything from the online side in the city area, like specifically Hyderabad, do you see anything which is kind of changing, any scenarios which are changing in the recent times with the online competition players or aggregators fastening up? Do you see them gaining the share or anything of that sort? Any observations on the industry side?
So I know this has come to us a lot of times, even previously. So we've definitely not seen a huge impact on this aggregator business on us. Probably also because of the integrated model itself. Because radiology itself cannot be serviced at home or remotely. And this customer, for convenience, even if he gets pathology done, would have to come back to a center for radiology. And normally we see an increase in demand for home collection or home services when the pandemic is at its peak. So even the home collection peaks during the COVID times, whether we've seen it in the wave 1, wave 2, or even now in wave 3. But definitely the correlation of results with reference to both pathology and radiology tests is must. So we've not seen too much of impact here. In fact, the aggregator business that comes to Vijaya is only about 1 to 1.5% of our revenues, not more than that.
Thank you so much for these. And one last from my end, if you can help us understand the current scenario given the wave 3, any inputs that you can highlight, trends, is it settling down in your view right now, or what is the scenario? Thank you.
We would typically come into our quarter 4 scenario. Q3, we didn't see too much of COVID happening, and January is when it's peaked. Definitely, it's been a month full of COVID for us, and we'll be able to comment more on that in our next call when we catch up.
Thank you so much. That's all from my end.
Thank you. The next question is from the line of Sanjay Avatramani from Envision Capital. Please go ahead.
Yeah. Good afternoon. Thank you for giving me this opportunity. Can you highlight your capex plans in near future, and how do you plan to execute those? Thank you.
Yeah, Sanjay. As we explained, we will be opening at least like a 10 to 11 spokes and 3 to 4 hubs. And the typical capex requirement for the spoke center is approximately 90 lakhs to 1.1 crore. And for the large format center, there is a hub center with an MRI CT. It comes to around 11 to 12 crore rupees. And with a combination of 10 to 11 spokes and 3 to 4 hubs, what we expect is around 75 crore capex for the next financial year. And since we are expanding in the Tier 2, Tier 3 towns, and our go-to-market strategy is to start with a hub center whenever we enter into a new market. So in case if there is any change in the mix, there is more number of hubs compared to 3 and 4 that we're planning, since we want to penetrate into new districts and towns. Okay, in case if we open more number of hubs, then correspondingly the capex might increase compared to 75 crore, but at the same time it will boost our revenues as well. And apart from that, 4 to 5 crore rupees of capex we're planning for our digital initiatives, like coming up with our new web portal and also a mobile application and the new billing software to make it compatible with the online and digital platforms. So 4 to 5 crore rupees that we're expecting for these initiatives, which might come on live sometime in the month of May. This is the capex estimate for the next financial year.
And sir, if I may ask a follow-up question on this, I mean, how are we planning to fund this capex, and are we using any IPO proceeds, or we are planning for some debt raising? How are we funding this?
No, as you know, the best part of the business model is approximately like 28 to 30% is the cash back percentage. So the internal accruals itself will be enough to take care of the 75 to 80 crore rupees of capex. Even though we open more number of hubs, okay, we will be able to use the internal accrual. We did not go for any external funding. And during the IPO, we have not raised any primary funding as well. It was a pure secondary sale. And as at December, we have cash and cash equivalents of approximately 235 crore rupees as of December. So we're fairly confident that we will be able to meet the capex requirement, and we don't need to raise any funding.
Okay. Thank you so much, sir. This answers my question. And one last thing, that what are the margins we are expecting for next year?
So, as you know, currently the margins are above 40%, and considering our expansion also, we're fairly confident on north of 40% EBITDA margins going forward as well.
Okay, so this 40% will be maintained, right? This is EBITDA margins for full year.
Yes, EBITDA margins.
Okay, sir. Thank you. Thank you so much. This answers all my questions. Thank you so much.
Thank you. The next question is from the line of Rahul Jivani from IIFL Securities. Please go ahead.
Hi, ma'am. Thanks for taking my question. On the non-COVID business, can you talk about how the 2-year revenue and volume CAGR has been for the non-COVID based business? Because on a year-on-year basis, the growth looks high on account of the depressed base last year.
Hi Rahul. As you know, the last year was impacted due to COVID, and we also had seen change in the mix between the COVID and non-COVID across the quarter. Okay, and also we were previously opening around 12 to 13 centers previously, but due to pandemic in the last year, we could open only 7 centers. Okay, and that too at the fag end of the financial year. So even though the 2 year CAGR, okay, of 7% on the non-COVID volumes, in our view, it is not the right measure to look at it, considering this last 2 years, okay, impact of the pandemic on the business. And if you see the quarter on quarter from last year Q3 to current year Q3, the non-COVID both volumes and the revenues have increased by 20%, and we're fairly confident. Considering the strategy of opening 15 centers, like in the current year, we already opened 9 centers, and we are on track to open another 6 centers by this financial year end. And in case if we see end of pandemic, okay, by March, and then once the normalcy sets in, then we're fairly confident on 15% top line growth even in the next year as well.
Sure, sir. So you mentioned that 7% is the non-COVID volume growth, which is muted because we could not open the desired number of centers last year.
7% on the revenue CAGR growth, and for 2 years period. Volumes, I need to look at it. Approximately, it might be lower than 7%.
Okay. And is there any difference which you are seeing in terms of how the recovery is playing out between your pathology and radiology segments on the base business, or you have seen equal recovery in both these segments playing out for you?
So Rahul, according to our opinion, and then we keep talking to other players both in the medical industry. So we still feel, at least in this region, we've not reached to the normalcy. Still there is some scope. Maybe we might not be able to quantify that. But definitely there is, had there would not been COVID, the situation would be a little bit different, would be a little bit better. So still
it's also been like a fluctuating experience for us, Rahul, because every wave has been showcasing something, that's something new is coming up. In fact, last wave, we saw a lot of COVID with COVID-allied tests. This time we see only COVID tests and not COVID-allied tests. In spite of that, the general mix of that 65 coming in from pathology, 35 coming in radiology is still maintained. And don't see too much of a difference, but definitely, like Shiva's mentioned, this region, the normalcy has not come in. We're still at about 80-85% of where we were pre-non-COVID time.
Sure, ma'am. And ma'am, just one clarification with respect to the 7% market share which you indicated in the Hyderabad market. This is the market share of the overall diagnostics market in Hyderabad. So what would be your market share if you X out the hospital-based diagnostics market?
Well, this is 7% out of hospital of entire Andhra and Telangana. There is no number specifically given for Hyderabad, so we do not have an exact number. That is why I mentioned we would still be at a double-digit number. Since I do not have any kind of document to base that, I do not have that number to give you. It would definitely be way higher in terms of Hyderabad.
Okay, so this is out of the hospital market.
The hospital of Andhra and Telangana together as a whole.
And
sure,
if you take hospital market also for these 2 states, then we would be around 3%. Because in hospitals, one thing to notice, though the number of testing is low, the average realization will be high because the tariff of hospital will be at least.
They're designed basically for inpatients, so that's a major differentiator there.
Sure, ma'am. And one question on your East India aspirations. So you said that you have bought out this Kolkata hub building. So are you going to refurbish the hub which you already have in Calcutta? And for expanding into the Calcutta and East India market, what will be your growth strategy? Will we continue to focus largely on the B2C segment, or during the initial few years, we would also be open to tapping the B2B opportunity?
So Rahul, this center that we're talking about is of our subsidiary. Medinova was operating in this building for the last 2.5 decades. And there was litigation in this building for a while now. And when the opportunity came and when the owners were willing to sell, and since our business is based completely on a B2C model, So the location is a known location, has been servicing, has done extremely well during the COVID time. We said it would be the right thing to do for the company. Since Medinova did not have sufficient funds, we, as Vijaya Diagnostic, bought this building to clear out the litigation. And when Vijaya had acquired this building in the year 2015 itself, it revamped, gave it a new look and feel, and invested in it. And it's a fully renovated center, is a hub center, but is operated by Medinova. Our aspirations of entering into the East will be from the Vijaya company. Vijaya has already identified multiple locations, would close on something soon, and that would be the hub center for Vijaya. Once that actually stabilizes, we believe only in doing B2C business. Even in new geographies, do not enter with the B2B. It will be an integrated model with a high-end lab which is accredited with the MRCT and everything else. So once that stabilizes, we will start adding on the spokes in the Eastern India region.
Okay, so this new hub center which you are talking about in the Calcutta market over the next 12 to 15 months, this is the hub center which will be put up by Vijaya.
Yes.
This is not the Medinova center.
Medinova continues to operate there, and the growth plans of Medinova will be decided by that company and the board.
Sure, ma'am. Thank you. That's it from my side.
Thank you. The next question is from the line of Praful Kumar from Diamond Asia. Please go ahead.
Yeah, hi. Good evening, ma'am, and congratulations on your performance. I have just two small questions. First is, in terms of inorganic, we are seeing competition, especially, players in Maharashtra and in Delhi acquiring assets to grow. What are our thoughts on acquisition as a strategy to grow? And second question would be collaboration with, as you have said that a lot of people ask us our questions on, say, 1mg and platforms. Do you think collaborating with platforms makes a better proposition for higher volume growth for us?
Sure. So, Praful, I'll take the first one, the M&A question. Since we've already mentioned earlier that we are very open to these M&A options. In fact, we selectively want to evaluate them. The key factors which we look at while evaluating these are more of the customer-centric focus. Since we are a B2B player and integrated player, the culture, the quality of the asset, the scale, and the team bandwidth itself. And when we do find something like this, the other thing that we look at is the geographies that we are interested in. So the core geographies would be this Andhra, Telangana, and the Eastern India region. So anything comes up in these geographies, more than willing to look at it. An added advantage for Vijaya would be, even if it's a pure path player or a pure radiology player, we add value to it by creating and making it an integrated facility. And when it comes to the aggregator business itself, like I mentioned earlier, about 1% of our revenues today coming from the aggregators. But most of the times what I have seen and in my experience is, these aggregators come into different geographies and then try to piggyback on the leader of that geography. So they come in and they want to tie up, and then they advertise, and that does come in as the aggregator business. So even though we are tied up and we give them our regular discounts, we see 1% coming in from here. And typically, again, patients have to visit the facility for radiology. So we see the volume not increasing much. In fact, it's sitting stagnated at this number since the last couple of years.
Got it. Thanks for that. One last question, ma'am. In terms of the radiology and pathology mix over, say, next 2, 3, 5 years, broadly remains the same as a strategy? And is there a change that you think, it should be more radiology, and how are the margins different in each of these businesses?
Praful, for us, not 2 to 3 years. In fact, from the last few years, we don't see a major change in the revenue mix at all. So it's been that 65-35, and we don't see a change also happening. I think it's going to continue at the same pace. Even the model of our centers, that's why I'm more in the mix of more number of spokes versus hubs. These spokes add to these hubs so that this volume also gets retained. So we don't see a huge change of mix here.
Got it. Thank you, ma'am, and all the best for the subsequent year.
Thank you. Before we take the next question, we would like to remind our participants, you may press star and 1 to ask a question. The next question is from the line of Vijaya from Bajaj Shares and Securities. Please go ahead.
Yeah. Good evening. Congrats for the 9-month results. Excellent results. Now I have a specific question under your investor presentation under strategy going forward. And I need a response from Mr. Chairman Reddy sir, because Medinova holding about 62% is with Vijaya Diagnostic. And you have put a lot of investment taking the building and planning Eastern India hub for diagnostic center under Medinova label. Now, Medinova shareholders, do they expect some future planning so that it will be amalgamated and merged, or how you are planning to treat Medinova stakeholders under Vijaya Diagnostic Center? Though you are putting a lot of capex money, and under Medinova you have already invested enough money, and still you have planned to make a hub. So can you throw some light on future strategy of your holding of Medinova Diagnostic in Eastern India, please?
Yeah. So the expansion that Madam was talking is not in the exact location of where the Medinova Diagnostic Center is there. Okay, we would like to expand in the other regions. And since the Medinova subsidiary was having the existing litigation as a parent, okay, we had to buy this building and then ensure the continuity of operations at our subsidiary. Yeah. And coming to the strategy and the expansion plans of Medinova, that will be decided by the Medinova board. And as of now, the Vijaya's plan is to go deep into the eastern markets, okay, not in the exact location where the Medinova center is there.
So you mean you'll be taking this Medinova label or the name which is existing in Eastern India, maybe Calcutta, again to other hub location where you'll be planning, or it will be only Vijaya Diagnostic?
That will decide in due course, Mr. Okay, depending upon the situation that time. In case if we use the any of the brand of the Vijaya, we'll have to take the appropriate permission at the board level. Okay, yeah. And since it anyhow it's the subsidiary of Vijaya Diagnostic with 62% holding, yeah. We'll ensure that the both company shareholders' interests are protected.
Yeah, because as being shareholder of Medinova, he'll be more concerned about alienation with Vijaya Diagnostic. What will be the future? That is the thing. Huh? Please, thanks a lot, sir.
Yeah, thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to Mr. Vijaya Reddy, Chief Executive Officer, for closing comments. Ms. Reddy, you may go ahead with your closing comments.
Thank you. As a company, we've always laid emphasis on adopting the most advanced and sophisticated technology, gave the utmost importance to hiring the best available skill and talent, never compromised on quality of our services. While ensuring this, we've always worked to keep our services affordable to our customers. With this being at the core of our culture and having the best of expertise, technology and infrastructure at our disposal, we believe that we are sufficiently equipped to make the most of every opportunity that comes our way and to maintain and grow a strong brand. For any further information, we request you to get in touch with Krishna Kiran or our external investor relation advisors, Orient Capital, and they would be more than happy to help you. Thank you again for your time, everyone.
Thank you. On behalf of Vijaya Diagnostic Center Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.